What's up, everybody? Welcome into today's video. We're going to be talking about 4 changes to the housing market that we can see with the Trump presidency. We got some valid points in this video, no pie in the sky type of stuff, some things that I really see could happening and probably will happen. And then stick around at the end because I want to share a story. Now, a quick story. I met someone over the weekend. I was at a wedding over the weekend. I met a large banker. He works for UBS, the United Bank of Switzerland. Him personally, he manages $3.4 billion. We had a great conversation about financing and kind of what opportunities I'm seeing and kind of how this is going to change my action, the type of deals that I'm getting ready to go after. I think we have a tremendous amount of opportunity as real estate investors. So let's dive right in. First and foremost, 4 ways Trump's win could affect the housing market. First things first is regulations. And this is very likely, everybody. It is very easy. So another thing that Trump talked about is like increasing supply of housing by building all these new houses on federal land. I don't see that happening. Where is federal land first and foremost? Right? It's in the middle of Alaska or something, like the middle of, just on the outskirts of Yosemite Park. Or so it's like there's no freeways there. I don't think it's likely to build an influx of new inventory on federal land. I think it sounds good while you're campaigning. Something that is realistic, though, is cutting down regulation on new development and on construction. And this is everything that has to do with getting your plans approved by a city, getting permits loosened up on the permits and things of that nature. It is just cutting regulations to make it easier for mom and pop investors and mom and pop developers like me and you to execute business. And this is a good thing. It lowers costs for us in real estate as well. It costs money to draw up plans and get blueprints and, permit and get surveys done on land and all of this stuff. This is all regulations. If we could ease up on regulations, it's going to help us. It's going to lower our costs. I'm going to share with you another thing here later in the video. It's probably going to increase our costs. So hopefully this could kind of balance things out a little bit. But regulation, I definitely see this happening. I definitely see the Trump administration lowering the barrier of entry, if you will, lowering the regulations for construction and housing, and that is going to help us as real estate investors. Second thing is tax policies and deductions. The big one here, everybody, this article talks about state and local tax deductions, which is great. The big one I highlighted for you right here is bonus depreciation. The previous Trump administration had this thing called bonus depreciation, and this lets apartment developers and investors and single family house, anything that's an investment property, just so you know, basically deduct more depreciation in the first year of ownership. This allows us to take future losses from the future but use them as write-offs today. And this allows us to take all these deductions off our current income, and it further incentivizes new development of rental units. And here's a biggie, everybody. This is what I want to get into, and this is going to kind of reflect the conversation I had with the banker over the weekend. But it also incentivizes investors to buy dilapidated apartment buildings and improve them. This is the inner city. This is a major thing. This is definitely going to happen, if you ask me. I think there's definitely going to be a decrease in regulations, and there's definitely going to be bringing back good old bonus depreciation. This is going to incentivize us to get into the major cities. This is where the housing shortage is. This is where people want to be, as close to the major cities. And, this incentivizes us to buy dilapidated buildings, add value to these buildings, and then either sell them for a profit or refinance and rent them for cash flow. Regardless, this tax incentive of bonus depreciation speaks directly to me, directly to you. These are 2 things with the cutting of regulations and then bringing back bonus depreciation, which is certainly going to have an impact on our business. Next is the impact of immigration and economic policies. Here's the deal. Trump is talking about tariffs on imports. So what we need to basically talk about is a lot of building supplies. I would say between 60 and 80% of building materials, including lumber, including faucets and countertops and all this stuff. A lot of this stuff, 60 to 80% of it, I don't have an exact number, but over 50% of it comes from other countries. So if there is tariffs imposed on these other countries selling the building materials that they manufacture that we need for our houses, and these building materials, now there's a big tariff on the manufacturer who's in another country like China or even Canada. A lot of lumber comes from Canada and these other places, okay? If the company that's manufacturing has these giant tariffs to pay, they could be passing these costs on to us as the customers. We need this stuff for our building and our reconstruction of houses. And if we want to go after dilapidated buildings and stuff like that, well, when we fix them up, we're probably going to be using materials that were imported from another country. And if the person importing this stuff and selling this stuff is getting a huge tariff, that could be passed on to us. So this is a bit concerning. I'm not going to kid you. And, these costs, that could mean more expensive building materials for us. So yes, we're talking about the first thing was a decrease in regulations. That could save us a little money. I think this tariff thing is going to cost us more money. I think prices are going to go up for building materials, and that's just something we need to keep an eye on. And then also, we've talked about in previous videos that Trump ran on a mass deportation of illegal immigrants. And what that could mean is basically a deportation of workers. A lot of immigrants work in construction. And if there's a mass deportation of these workers, that could force contractors and construction builders to hire domestic workers, which could be more expensive. So if the cost of building materials goes up from the tariffs and the cost of labor goes up because now these builders have to hire only domestic workers, right? And better documented workers and things like that, those costs could be passed on to us as investors as well. So those are two things right there. The immigration, if you were deporting a bunch of workers, it could cost us more money in the long run. Now also, if you're doing a mass deportation of 10 million people, that is going to soften up the rental market and really the buyer market for us as investors. Think about this. So if you own an apartment building and you have some families that are getting broken up or getting deported altogether, I'm not here to comment on beliefs on deportation. I'm just saying if it happens, you're losing renters, and it's going to soften the rental market. And we have been seeing softening in rents, okay, nationwide. And this is going to go into the story I'm going to tell you here as soon as I get done with my fourth point about Trump. But rents are softening, and a mass deportation of people would only soften the rental market more. And that could affect us as real estate investors who are, in the rental property business. The fourth point is mortgage rates. And as we've mentioned on previous videos, the President of the United States, the executive branch of the government, does not control interest rates. And, Trump could, kick and scream and bully the Fed as much as he possibly wants to. That's what he did in his last administration. But Powell, who's the chairman of the Federal Reserve, has already said they're not going anywhere. He's not going anywhere, and he's not going to take it. So we'll have to see how this works. But Trump is running on, I'm going to lower interest rates, this, that, and the other. A lot of economic experts, including myself, I don't see. This person saying, I don't see a major drop in interest rates coming in 2025 unless, right, and this is what I'm adding to this comment, unless we saw a major recession, which anything's possible. Jobs numbers were down for October. We got to see where they come in for November. But a lot of experts are not seeing a major decrease in interest rates, and that affects us as real estate investors as well. It affects the people that we're selling properties to. It affects the refinances that we do. If we're buying and refinancing rental properties, those are the 4 points. Regulations, I believe that's going to be cut, and that's going to help us. Tax policies, bring back that bonus depreciation. I believe that's going to happen as well. That helps us. We got tariffs. I think that's going to make the cost of building materials go up. And deportation, I think we're going to be losing a lot of renters and workers, and that's going to cause rents to soften and the cost of labor to go up, and then mortgage rates. I don't foresee these things coming down. So what does this all mean, and where do we see opportunity? I want to share with you this brief story here. So I was at a wedding over the weekend, met somebody who works with UBS. It's the United Bank of Switzerland. We were talking about the economy and talking about, I had mentioned, I want to go after 50 to 200 unit apartment buildings. He said, look, rents are softening. A large institution like UBS, they invest millions of dollars in research, right? They are way smarter than me covering these articles from Yahoo Finance, okay? They invest millions of dollars in research. So I was listening pretty carefully what he was talking about. And he was saying that a lot of mom and pop investors, a lot of mom and pop operators like me and you, who've been buying up apartment buildings really for the last 3 years and 5 years, a lot of these people are getting squeezed right now for numerous reasons. First reason is rents are tapering off. When these mom and pop operators purchased and invested in these buildings, they basically were underwriting their numbers kind of as if rents were just going to keep going up. Hopefully, a lot of the mom and pop operators out there were conservative with what they planned on collecting for rent, but I guarantee a lot of them were juicing the rents, and a lot of them bought these buildings anticipating rents to continue to go up. Well, as we see rents continue to level off and actually decrease, and actually more units coming onto the market after a deportation, more units coming onto the market after all the new construction. There's a lot of new construction units hitting the market as well. We are already seeing rents soften. So a lot of these mom and pop operators that bought this property anticipating an increase in rents are not getting these rent increases, and that is creating a squeeze, right? They're making less money. They're having a harder time covering their bills. Now, the next thing that has gone up dramatically over the last several years is insurance costs. And a lot of these mom and pop operators could not have factored that in. No one knew insurance was going to go up so much. So that's squeezing them, and that's pinching them as well. And then finally, a lot of these mom and pop operators that have been purchasing the last 3 to 5 years, they all used adjustable rate mortgages, and they adjust after 3 years and after 5 years. The rates have gone up dramatically in the last 3 to 5 years. So I believe, and it was just basically reiterated and reconfirmed after talking to this banker from UBS, I think a lot of mom and pop operators are going to be squeezed. They're already getting squeezed, and it's going to get even worse because interest rates, as we just discussed, are likely not coming down. So this mom and pop operator does not have the ability to refinance into a lower rate or to a new note. They don't have the ability to refinance. Their mortgage is adjusting, so their interest payments are going up. Their insurance costs are through the roof. The rental market's softening. A mass deportation is only going to soften the rental market even more. This is like a perfect storm for defaults coming in the multifamily space, in the apartment housing space. Specifically, all these people who've been trading and buying up these apartment buildings and doing these big cash out refinances. And that's a great play. We love the BRRRR. We love the cash out refi, tax-free money, this and that. But what that means is they've levered up. They've used leverage and borrowed huge loans. And these loans now, their interest rate is going up. Their payment is going up. Insurance costs are through the roof. The rental market softening. It's crazy time, right? So we are forecasting softening in the commercial space, and this is what this banker confirmed with me. I think we're going to have some really good deals if we position ourselves appropriately, and that's what we're going to be doing here on this channel, is positioning ourselves appropriately to take advantage of some of these deals that could be coming to the market in the form of these mom and pop operators who just want to get out. Their costs have raised too much. Their loan is too much. It gives us the opportunity for us to position ourselves to buy these apartment buildings. That's what I'm going to be doing. I'm actually going to be making a big push to network and contact as many local and regional banks as I possibly can, introduce myself, let them know if they find themselves taking back any properties that they loaned on, any multi-unit buildings. I'm going to be here to buy these properties if we can make the deal work. So hopefully you enjoyed what we discussed today. I see a lot of opportunity for us all. And as always, we appreciate you subscribing to our channel. We're watching our channel steadily grow. Ask me any question that you may have in the comments. I do respond to every single comment. And hey, the future looks bright. Regardless of what's going on in the economy, regardless of what's going on with our president, regardless of anything, we are going to position ourselves on this channel to benefit, to profit, to build wealth, because that's what we're all about. Hope you are all doing great. Hit me up in the comments, and we'll see you on the next video.